depending on how time allows. And so I'll be kind of cracking the whip a little bit here to get through some things. And but I also don't want to rush some things. So just let me know if I'm rushing too much. Anyway, are there any additions to the agenda? All right, I'll take a motion to approve the agenda.
I, Sonia, make that motion.
Do we have a second?
Second.
Chris seconds.
Yep.
Any discussion? Any discussion? Any discussion? All those in favor of the motion signify by saying aye.
Aye.
Any opposed? All right, motion carried. We'll move on to the consent agenda, which includes the meeting minutes of June 24th, 2026. Any changes to that? All right, I'll take a motion to approve the consent agenda, which includes those meeting minutes.
This is Desi, I'll move for that.
Second.
Desi and then Cole. Any discussion? Any discussion? All those in favor of the motion signify by saying aye.
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 Any opposed? Motion carried. Okay, next item of business is item 2A, Brown & Brown and seek contract renewal years. I'll turn it over.
Stephanie, is Stephanie on?
Yes, I'm here.
Okay. Did you want to go over that one?
We just need to confirm that the board would approve another 3-year contract term.
Do we have a motion to approve a 3-year contract term for Brown & Brown and seek?
I'll be first on that motion.
Okay, Keith? Do we have a second?
I'll second that, Sonia.
Sonia, second. Any discussion?
Just a point of discussion from SEEK perspective. Typically ours is an annual, but we support the 3-year renewal as well. We're good with that. We've done annual up until now, but we're just fine with the 3-year renewal to make it an easier process and everything. So we're okay with that, just to be sure that that's clear in the motion and processing.
Steve, were you going to say something? No.
Nope. Sorry.
Okay, any other discussion? Any discussion? All right, all those in favor of the motion signify by saying aye.
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 Any opposed? Motion carried. Next item is committee update. We've been working on some termination language. I believe we've come with well, I know we've come with a recommendation. Steph is going to talk us through that.
Can you all see my screen?
Yes.
Yep.
Yeah.
Okay. So we met with the committee and we're given some instructions on what to do with the language. After we made some modifications, it was then sent off to Zach, the attorney, to review. Zach came back with his own recommendation. There was one change of clarification within the termination language. So currently it reads that member groups who submit written notice of termination to NDPHIT have a 30-day calendar grace period from the date of receipt to withdraw it. And after 30 calendar days, all contractual termination provisions take effect. Submitting a termination notice does not alter or waive any existing contract obligations. Any terminating group that later wishes to re-enter the trust must reapply as a new applicant. Accepting member groups within the 30 calendar day grace period, member groups who provide termination notification will not be able to renew with the trust without satisfying the new group onboarding, underwriting conditions, and contract requirements, including the initial deposit. All contractual termination provisions remain intact regardless of reapplication. So the change was accepting member groups within the 30 calendar day grace period. It was just to clarify that, hey, if you're in that 30-day grace period and you decide that you're really not going to terminate, we will not make you go through underwriting again. So that was the clarification language he added. And that's what the final language with everyone's review so far looks like. But if we need to tweak or modify this language, this would be the time to let us know if we need to take it back to committee or if the board accepts it as is.
Any other clarifying questions for Steph or the committee? If someone is okay with that language, I will look for a motion to approve it.
Chris, I'll make a motion.
Motion by Chris,
Kevin, second.
Evan second. Any discussion? Any discussion? Any discussion? All right, all those in favor of the termination language signify by saying aye.
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 Any opposed? Motion carried. We're good to go.
When would you like us to make this language effective?
That's a great question. What do you suggest? Gotcha.
Probably, we could probably make it effective with the next renewal cycle of January 1. We might want to discuss it a little bit with the committee, but we need to give people time to know that it's coming. So it's either with the 10-1 or the 1-1 cycles, or we make it effective today and just roll it out with today's date. Or make it effective for October 1st or September 1st or whatever we want to do. Sorry, not September 1st, because that's too soon. But
Steph, when you say January 1 renewals, are we talking 2028?
2027. So, and it would be effective for everyone. So we could do it as of 10-1 and make it effective for both the January and the October pools as of that date. We could make it effective November 1st, right? Because it's an amendment to the contract that your membership has, right? It's the membership agreement that's being modified and amended. So we could make that effective date either to coincide with a renewal effective date of either the October or the January pool, or we could simply make it, hey, this is just a mid-year change. We're going to make this effective November 1st. So, and the reason we want to
Go ahead. Sorry.
The reason we want to make this language applicable in the first place is because a question had come up from our October pool as they were going through looking at what their termination provisions are and what happens if they do actually terminate and decide they want to come back into the trust. We don't have anything that specifically addresses that within the plan. So we wanted to call out that, yes, you can terminate. You have 30 days to reconsider that. But then after that 30-day grace period, then you're termed and you would be subject to re-enrollment and re-underwriting. Because of the standardization of the plans that are coming, there's a lot of attention being put on, well, what are our termination provisions within that membership contract? So it really is just a clarification of the terms that are already there, based off of a question that arose during the October renewal cycle. We've not yet had any groups terminate or leave NDPHIT. But that, is a possible scenario for the future. So we wanted to have the language ready.
How many requests of this termination have you received?
For the October groups, oh gosh,
For
probably
October, yes.
For the October groups, probably only a handful. We haven't had any requests from our January pool from the calls that I've had so far. But probably just a handful.
And the previous or the original language didn't state that they had to go through the underwriting and all of that if they decide to come back.
Correct.
It basically just would let them terminate and then come back without any of this. I guess with that information, I would make a motion, if that's what you're looking for, I guess, to have this go into effect for the January group so that it gives them time to know about it. It's a little soon to put it in effect for the October renewal.
We want to do it all at the same time because we have to send it out to every single group, and it is a member contract agreement. I would
Right.
recommend doing it all at the same time.
Right. So my recommendation would to do it effective for, January, or even maybe give them 30 days before their January renewal. So maybe have it go into effect November 1st.
What does the process look like in terms of, either amending the contract or, as the contract is renewed for each pool?
So when we amend the membership agreement, we do it across the board at the same time, regardless of the pool, because it's a term of the agreement that affects everyone in the pool, in the trust. Sorry, I'm getting my words tangled. So we want to make sure that everyone in the trust has the same exact contract language at the same time. We want to be cognizant of the renewal periods, right? But right now, the January pool is already in their renewal and accepting their renewal terms.
Okay.
So they're already in it. We're already going through that process. So they've already been given their rates. They already know what they're going to expect. So now it's just a matter of letting anyone know who is interested, what is coming. As far as the process, we have to send out the language to every group. Now, we've in the past, in consulting with the attorney, we were not required to have a signature on this language, okay, in our amendment. And we'll verify that again if we need to, that this does not require a signature. We do have to send out a notification to the groups that the language is changing. We would like them to acknowledge via a signature that the language is changing, and then keep that as part of their contract on file. Now, not everyone signed the acknowledgement. I think we had maybe one or two groups when we made an amendment last time that didn't actually sign the acknowledgement. But I think we made two or three email attempts. And then for those that were stragglers, I believe phone calls, like actual outreach. Angie did some phone calls to groups to remind them that needed to come. And then we did one final email blast that said, hey, we know you haven't signed this, but just be aware that this goes into effect as of this effective date with or without your signature. So we document all of the contact that we make with every group. We put it together in this big thing called a smart sheet that Angie and the SEEK as the trust administrator have access to be able to track who responds, when they respond, and whether they signed or didn't sign. So it's a long process. It takes a lot because it's 130 member groups in the trust that we're notifying.
I guess thank you so much for explaining that further. With that information, I don't see why we wouldn't just have it go into effect today when the motion was made to accept it.
Second. Okay, we have a motion and a second. Any other discussion? Any discussion? Any discussion? All right, all those in favor of the motion to put the termination language effective after this board meeting, I suppose, or today, signify by saying aye.
Aye.
Any opposition? All right, motion carried. Next item, we have board election. We have a few that are up, and I think we're going to make a plan for that. Angie?
So, last year with Brenda leaving, one of the things that slipped through cracks was doing a board election last year, which means that this year we have more up for election than normal. So in the bylaws, it says that we can't have any more than 3 trustees term in 1 year. So then I started evaluating where is everybody at. So, Keith is ongoing. So Keith, you're stuck. Steve, Mike, and Jenny are not up for reelection. And then, so Cole but he's the chairperson elect, so we would leave him on there. So the bylaws also allow us to do a staggering. So then what it looks like is, so we would need 3 people up for the election. So that leaves Chris, Sonia, Kevin, and Desi is who we'd be looking at. I've had conversations with each one of them, or, have kind of talked to them. I don't know if you guys want to speak specifically to your situation or what your thoughts are for that. But in those discussions, what I kind of gathered, and I'll let you guys speak to this. So there's 3 that are school, right? So we probably don't want to have all 3 school elections. So what we would end up doing is having Chris and Sonia, their, whether it be themselves redoing it, or we put that vacancy up if they're not interested in continuing. And then Desi as the only political sub. And then, so that's kind of what we would look at doing, but I wanted to make sure that the board was okay with that. Make sure you were aware that that we're doing a staggered, and probably will end up doing that kind of along the way a little bit too. So, just wanted you aware of that. And then just wanted to make sure that that works for everybody, if there's any concerns or issues with that, or if that works for everybody. So we don't really need to vote on it, but it's just to kind of make sure that you guys are aware of that, that we're enabling that process, so.
Sounds good to me.
Yep, go for it.
Okay. Perfect.
right.
And I'll reach out to you individually just to make sure, like, do you want your name on it, or are you coming off altogether and just want it to be the vacancy? I'll do that individually, but just to let you know that that's kind of where we're at. So that's what was with that one, so.
If you got an option in the middle, Angie, that's what I would do. I don't really want to like post it as a vacancy if nobody comes forward on the school side. I mean,
Right.
not saying
Right.
adamantly no, but open it up.
Right, okay. And that's the first step, is the call for nominations, so we can see what happens with that as well too. You know, if we don't get any other nominations or we don't have anybody else run, I appreciate you being willing to stay on, and I think Sonia, you kind of had that same perception too, so we'll see with the call to nominations. And that's still a little ways out, but I wanted to be ahead of the game this year and make sure it didn't get dropped this year, so I just wanted to get this all on the books, so. Thank you all very much.
All right, thank you. Next item is 3A operational strategy, and we'll start with stop loss explanation.
Deputy, do you want me to share, or do you? Or can you
I'll
share?
go ahead and share.
Yeah, go ahead and share.
Try to, if I can. Okay, here we go. Can you all see that screen?
Yes.
Yep.
Right.
So we're gonna review, this is a change in the contract terms from Cambia taking over the Blue Cross of North Dakota. So this specifically impacts their contractual terms on stop loss. So we're gonna go through this structure to give you an idea, just so that you have a little bit of background to it, and so it's all clear and transparent as to what their process is, but we're also ensuring that we're putting into place the right type of protection of stop loss going forward. So go ahead to the next slide there, Steph. So this is just highlighting kind of how this analysis was done. We look at we're a self-funded trust. The existing contract is called a paid stop loss, and I'll describe what that means in just a minute. The new contracts that we are looking at right now, first of all, we're doing a RFP bid to other markets to bid out the stop loss, which we told Blue Cross that we are going to do. And we are bidding 2 particular contractual options. One is a 12-12 to take over on the current contract, and we're also getting a quote for a 24-12. And we'll explain to you why here in just a minute. We're going to give you an example of like a $500,000 claim and what the elements of that are, and the timing and the payment process and the contractual obligations of the carrier still. So go to the next slide. This just gives you high level. There are 2 terms in a stop loss contract. One is called the specific and the other is called an aggregate. We actually removed the aggregate well, it's actually, it's 120% corridor that Blue Cross currently has, I should say, in the contract that they have today. What does that mean? That means if you exceed your budget by the expected claims by 20%, which means you're having a lot of high cost claimant activity, then it's that second level of reinsurance. That's at the aggregate level. Most of the things that we focus on are at the specific level because we look at the predictability of how many claimants given the size of a population, and also the clinical conditions that are affecting potentially high cost claimants. So right now we have a $300,000 threshold. Also, just as a reminder, we're having the actuary that's working on a project for us right now evaluate whether that $300,000 is the appropriate level for the trust at this point. If you remember, we started out at 175 and now we've moved out to 300,000 a couple of years ago. And because of a concept called leverage trend, which is the trend inflation that happens on the very high cost claimants. If you do not move your stop loss level and review it every year, which we do, to determine if the impact to the high cost claimants in a leverage trend, essentially when the stop loss renewal comes from the carrier, they'll push 100% of their what they call their underwriting risk exposure, which creates a higher inflation. If you say medical inflation, let's say is 9% that we've talked about historically, leverage trend doubles that. And it's a technical term in kind of the stop loss world, but what the important thing about it is we keep and we monitor it, and then we determine if we should move the 300, let's say, to 325 or 350, because if we don't, we're going to get a really high push on the increase from the carrier. And we could have that delta, if you would, between 300 and 350 actually cost the trust less than the premium increase on the stop loss. So at another time, when we get the quotes or the recommendation back from the actuary, we'll actually give you some illustration on how that's going to work. But this just gives you the example. It's 300,000, any claim, any specific individual within the contract terms that exceeds 300,000 is paid by the carrier. In this case, it's Blue Cross of North Dakota. Go to the next slide. So here's how an incurred and paid contract works. The illustration in the middle is really the important thing. Let's say that we had a claim that incurred in 24, 25, 26, or even 27. The way that Blue Cross does it right now is it does not matter the incurred period, it's paid. So if it incurred in the prior to January's renewal. So let's say the most important thing to remember is this contract that we're under right now is going to end, which means the October pool, September 30th, that is the end of this incurred contract. But any claim that incurred from any prior period, no matter when it gets paid, will be covered by that contract still, even though we're into a new period. That's called a paid contract. It's almost like a fully insured. It just says, we don't care when it incurred or when it gets paid, we're covering that claim, okay? So that's what the current contract is. If you go to the next slide. So what are we recommending? We're recommending actually that we next year, starting with October 1 through September 30th of 2027, that we enter a 12-12 contract. And I'll explain why in a minute. But then also January, we would do the same thing. Any claim January 1st through December 31st of 27, it will be covered under a new contract period called a 12-12. The reason that we are suggesting that is that it costs about 20 to 30% less than the current contract. And the current contract covers all the incurred claims of anybody up until that point, no matter when it is paid. So the trust is protected for any claim that occurs before the renewal, no matter when it gets paid. And the 12-12 contract is what we call the interim contract. And then what we would do in 2020 at the next renewal cycle, better to describe as a renewal cycle as opposed to even a year, we will renew with what's called a 24-12. Why? Because we want to cover any incurred claims in 2027 or the new contract period. And if it gets paid in 2028, it's still covered. So that allows us to ensure that ultimately we have a 24-month protection on the renewal in 2028 or the next renewal. But in 2020 or 2027, we're suggesting a 12-12 contract. Let's assume we do save 20% on the premium. Well, based on our annual premium that we're paying right now for both periods, we're paying about $4.5 million. Well, it potentially could save close to $800,000. That just becomes a reserve savings. So we've already calculated the new premium increase. So we're not giving a reduction or a credit to our funding levels on the renewal. We're basically just saying it's already budgeted for the increase that on the current contract. And what we would do under the 12-12 contract, again, any premium savings just gets accumulated in a reserve component. And then when we calculate the 24-12 contract, which is more expensive than what we're going to implement in 2027, we're basically keeping our basis for premium funding as if a 24-12 contract were in place for next year. And the reason that's important is because, again, we've already funded for it. And then when we calculate a renewal cycle, which means the inflation, we typically put in a 20% increase on the stop loss. So if it makes sense, we're going to keep our funding level up here for stop loss premium, even though our actual premium will be a little bit lower. And then we're going to take that number in 2028 and put the 20% on top of it, so that effectively it gets accounted for in the future budgets for that basis. The important thing to know as we consider any of these contractual terms is that just knowing that the only real difference is that the current contract Blue Cross has, it does not matter when the incurred period was or the paid period, it's paid. Now, I need to clarify another really important thing is, and we had a call with the stop loss carrier and Blue Cross yesterday on this topic. And by the way, even Blue Cross Cambia stop loss rep who was on the call suggested that what we are thinking about is actually a good idea. That going to the 12-12 and then renewing with a 24-12 contract going forward. The second thing that we discussed and why we think that even changing this contract, is not going to create any potential liability, is that Blue Cross or the state of North Dakota has a timely filing requirement for hospitals, which means if you don't file within 12 months, you're not responsible for essentially getting any reimbursement. So they have to send in that claim to Blue Cross Blue Shield from the time an event happens within 12 months, or it's not covered. That's why having this window of even 24 months gives a safety net, if you would, of protection, because of the law that's actually in favor of employers or the carriers to ensure the hospitals don't all of a sudden send a claim, 36 months later that said, hey, pay this amount. It literally says you have to send that claim within a 12-month period, or the payer or the payee, I should say, is not responsible for it. So hopefully that makes sense on that structure. If you go to the next slide, we'll just give an example of kind of how this works. We've already explained kind of the incurred and paid period, and ensuring that, and one of the things that we'll do as well, as soon as we'll look at the new contract options and review all the language to ensure that everything we just described is actually going to be in effect into this structure. Go to the next one. So here's the important thing is on this example is just to say if we have an incurred claim and paid in next year for 2027 under the new contract, if it's incurred and paid in the year, then it's paid under that 12-12 contract. If it was incurred, and I think the next slide gives an example of this essentially. So if you have this is a good example. Let's say that January 1st for the January pool is the effective date of the 12-12, but let's say a hospitalization, and we're assuming the January pool occurred December the 15th. But it doesn't get paid until January 20th of 27. So what happens in that situation? Because the new contract says we don't cover that prior period. That claim that happened on December 15th is actually covered under the existing contract. Because remember, it doesn't matter when it was incurred or when it's paid, it's covered. Okay. But the new contract says in order for us to cover that claim under this new contract, it had to occur after January 1st. And if it got paid February 1st, then we're covering it. And it only covers that January 1st claim under the new contract until December 31st of 2027. If it was incurred prior to that period, it's still under the existing contract. And then January 1st of 2028, we put in place the 24-12 contract, which means it's going to cover the prior 12 months and any claim going forward for the next 12 months. Okay, so any questions on that?
I do have one. So
yeah,
explain to me again the savings by moving the 175 to a $300,000 cap for the
well, we already did that.
Right,
I was just
but how was that? How by increasing it saves us money? You would think if you increase it, it would put more liability.
Oh yeah, so that's a good point. So let's say right now we're at a 300, but when we did make that change of 175 to 300, what we did, Cole, is we calculated the number of claimants from an actuarial basis between the 175 and the 300, and we determined that the exposure of that $125,000 was far less than the premium increase of remaining at a 175. So that's how it was calculated. And so, and that's why I say every year, we look at that stop loss threshold, and we do it for every one of the self-funded groups that we work with. We say it should be, like I said, right now we're at 300, we'll look at 325 and we'll look at 350. So we actually have this high case claimant tool that looks at the history of the claims on, that have exceeded the thresholds. And then also what the forecast is potential liability within each of that corridor difference. So if it's 25 or 50, we know that, and then we measure it against the premium increase. So next slide. So this is just kind of a summary. So again, the old contract, as I mentioned before, we'll cover any of the incurred claims up until the end of the period, and it doesn't matter when it gets paid. 2027, we'll go to the 12-12, 27-28 years. That's a 2-year period is actually covered under the renewal for 2028 under the 24-12. And then every year going forward, we'll have a 24-12 contract as a rolling forward, provision to give all the prior period covered and the current period covered for risk. Okay. Any questions on any of this? I think I put this just as additional slides, but probably not necessary because it's the important point was just to give the example of the claim, and we'll send this out to you. So if you want a chance to review it, go through the detail. Once we get final numbers, in fact, while we were on this call, we got an email from Luther at Blue Cross, and he's just wanting to verify that this is the contract quotes that we want to receive, and I verified to him, yes, we do. So we should have those fairly soon, and then we can show you. We'll send out an exhibit to, as soon as we get those final numbers, and we'll look at the quotes that we'll receive outside of the market as well. As soon as we receive that, we'll give you exhibits to look at that financial savings potential, but just know if whatever that is, it's just going to act into a reserving fund, but at least you'll know the number. And then we'll come up with the recommendation as to what options that, from the marketplace versus the renewal that we get from Blue Cross.
Okay, so we have a little bit of an update on this strategy that we're exploring, and then we'll have some updates at a future.
Yeah, fairly shortly too, because we got to make decision. We'll have, once, because we got to lock in our October pool renewal essentially. And then one other element, this is unrelated to this, and I don't know if it was on the agenda, Mike, but I did have a call yesterday with Kyle Davison on the other subject that we were talking about on our call. If you want me to give you some updates on that.
Yeah.
That's the next agenda item.
Yeah, I think
It is agenda item? Okay.
I think I'm gonna because that's a giant rabbit hole. Maybe I'm gonna bump that to the end and do these other items, and then we'll
Yeah, yep, no
see if we
problem.
got time.
Yeah,
to
because
do that.
I do have actually some important updates on that.
Okay. All right. If we don't get through this other stuff by 1:45, then then we'll get into that for 15 minutes.
Okay, sounds good.
I think so. I'm gonna come back to 3B. Let's do. Because I think investment exploration might be fairly quick. Is the audit update long, or what's seek?
I can make them pretty quick too. And Hunter, do you think there's going to be a lot that you have to put in there?
I don't think so.
Okay, Nora will have you, or whoever's in charge of the investment exploration will have you go.
Hunter, do you want me to talk about it or?
Yeah, why don't you go ahead?
Okay, so Hunter, Angie and I met over Teams message or Zoom message or one of them, I can't remember which one, but we met and kind of went over some of the options and stuff. And right now, just with kind of everything that's been going on, and some of the options that are out there, because like if we do want to go into something, you'd want to look at getting like a fixed income portfolio manager, things of that nature. Those are all going to cost fees. And right now, the types of returns that are happening between the volatility in equities and fixed income right now, and through what the year's been doing, our CDs have been getting just as much. And then also with looking at how the last couple of years have gone, and you'll see in the financials that there's, we're like in a loss position. So more, money is going out than it's coming in. We didn't know if this would be the time to try and change into doing some investments that would possibly put the funds that we do have be a little bit more risky for what the returns currently are coming back. So right now we just thought, like, we looked at some of the different options that are out there as far as high yield savings, which we are already in. And we looked at those savings account and what we already have with the sweep, because when we went with First International, they were able to do us a sweep account, and we are getting the same rate that high yield savings accounts already are by doing that sweep account. So just looking at that, we just didn't feel like we would recommend the board going into any new investments yet at this time until things kind of stabilize as far as not having losses on the books where more cash is going out and coming in. And with the returns that we're still continuing to get with those CDs that we do, we have all of them on a basis where, excuse me, with the maturities and the due dates where they come due are all kind of scattered like by month. So we have something coming up. So if we need the funds, the cash would be available, but yet they're continuing to have between 3 and 4.5% on returns for our CDs still. So that was our recommendation, was just to kind of stay where we are, always keep monitoring it, but kind of watch once we have more cash stabilized and our members' equity is not going in the wrong direction. Any thoughts from the board?
Like, we have a recommendation to just really not do anything in this area. Seems like a good idea, unless board members feel different.
And we'll continue to put more in CDs, since the board kind of gave us that leeway like about a year or two ago, that if we do have extra in the cash ones, we will continue to put more in CDs as it develops, as long as it's still like that allocated appropriately.
Okay. Seeing head shaking no from people, so we'll just let that die at this point. Nora, do we have any financials to approve for this month?
We will have July's. You want me to do July's real quick, Mike?
Sure.
Okay, so I can share. Where's my share? All right, we are gonna look at the income statement first, so you can kind of see why the balance sheet ended up where it did. July was a rough month for our loss ratio. They've kind of been up and down. June was a good loss ratio. It was only in the 80%, 80 some percent. So, there, and you did get a copy of those, but I won't go over those. So it's really been sporadic on what kind of loss ratio we're having by month. It's just depending on what's going on, what's going on. But so you can see, we did have a net loss of 1.4 million in July, having a loss ratio up at 122%. There's over 7 million in losses incurred, which did take our year-to-date actual. We were ahead of the game, and it kind of took us to a negative about $500,000. So that's why I was saying there's stuff going on. Timing is everything. Last July, you could see, was over 100% as well. Traditionally, July is a bigger one. I don't know if it's people gearing up for getting appointments in for back to school, things of that nature, before August hits. But looking at historical, July is always one of our higher months. So
Nora,
yep.
I think it's important to note too, like each month is kind of unique. We're billed by Blue Cross on a weekly basis. So in July, for reference, there's 5 weeks of billing that we got billed. In most months, it's only 4. So that's kind of probably the main reason why it's that much higher as well. It's just a timing thing of when we get the weekly bills and when they process.
And that's something that'll play into why December's changed as well. It's timing of bills and stuff like that. So you guys will see that again. But yeah, it's really can be sporadic. There's nothing that kind of leads out. But yeah, this year, just timing of it, 5 full weeks in July for the timing is going to be something that factors into. But yeah, so it was a rough month, but we're about a $500,000 loss for year to date. Last year at the same time, we were about 150,000 to the positive. So the balance sheet, we're still doing well, and our cash in CDs, as you can see, we do maintain more, and we probably will put more in CDs and be about half of it in CDs and half of it in cash, close to, and just work our way up there. But as you can see, the pharmacy rebates receivable is up at that 2.7, so we were waiting on quite a bit of that still. That stop loss experience receivable is down to 511. We were able to collect the 10-1, correct, right? That stop loss experience refund for the 10-1 policies. So that did came in. That was a couple $100,000 that came in and stuff, and we still expect to collect this one. I think you were talking sometime maybe October time frame, Hunter.
Yep.
So we do expect that to come in as well. Accounts payable still remain consistent. It's what's coming in that we get billed on a leg from Blue Cross Blue Shield. But so membership equity has gone down. So we are at about 7.2 in membership equity at the end of July. But again, kind of one of those reasons why not doing anything risky with the, cash investments at this time and keep things liquid.
I mean, any concern from, do we need to do anything drastic at this point, or just keep monitoring with?
Yeah,
some
I don't
laws?
think we do. A lot of it can be timing. Like I said, we had an 80% loss ratio in June and 120% loss ratio in July. It is only down $500,000. So hopefully some of those, we'll be able to book stop loss experience receivable in the current year too, again, depending on, how these ones go. I don't think there's anything drastic. You guys are continuing to increase premiums for the next one. October's already decided, and those rates that are going up. So I think you're trying to be proactive in making sure that these costs are covered. So I don't think at this time personally that there's anything drastic other than those rates that you're already increasing need to happen. Unless Hunter, is there anything you want to add?
No.
Anything else on the financials, Nora?
Nope.
Do we have a motion to approve the July financials?
Sonia makes
I'll do
that motion.
Keith will second.
All right. Any discussion on the July financials? Any discussion? Any discussion? All right, all those in favor of approving the July financials signify by saying aye.
I,
Aye.
Any opposition? All right, motion carried. Thank you, Nora. Can the audit update happen in our next meeting since we got to have a special meeting? Okay. So
Yeah, I think it's good to do that because we got this stuff out late anyway, so you guys will have more time to look at it. So, yeah.
okay. The next item deals with NDPHIT school district update. This is a rabbit hole topic. Just maybe in a nutshell, there is a conversation happening out there about school districts shifting to NDPHIT, potential legislation, and the idea would then they would reduce their per pupil payment by a certain amount, whatever that amount would be, so that it would zero out the health insurance costs for the school district. Where that ends, how, what, when, if there's concerns about going too fast, concerns about studying it, concerns all over the place. We go on and on about it, but there's a conversation happening out there, potential legislation, and what does that mean for NDPHIT? Good question. I think there's a lot. So I know Steve's been around in some of those conversations. Maybe I missed something, but it's kind of be upfront with folks on what's happening.
Mike, did you want me to give my?
Yeah, and then Randy, sounds like maybe you talked to somebody, so.
Yeah, so I reached out to Kyle just because he's both a state legislature as you know, state senator, as well as on the NDPHIT board. He, first of all, he's slightly aware of those conversations, but he said one of the biggest challenges that's going to happen is, and he said legally and contractually, we're a grandfathered plan at the state. He tried to get it changed last year to be non-grandfathered, but it failed by one vote. He said that's a bit. Anytime you're trying to integrate grandfather plans or non-grandfathered into grandfathered, it runs into a contractual legal issue. So in order to even venture down a discussion to a possibility, you'd have to change the law within the state to integrate non-grandfathered plans into PERS. And he said, right now, there's not a big appetite to even consider that. And there are a lot of provisional coverage issues because of that change. So it's a completely different contract is really what it is. So if you remember when we had individual groups that were with NDPHIT that came into the trust, they literally left the grandfather plan to come into NDPHIT, which is a non-grandfather plan. Those two contractual arrangements cannot coexist in the same arrangement. And he said, I don't know who's really looking at this, but he said they may not understand that that's a big issue. So you can do all the study you want, but if you can't change the contractual structure of PERS, it's going to be a really big challenge to even consider that. He said, now, not that can happen, but he said if it does and can, it's going to be a long period of time because it's going to take multiple legislation components to actually make that work. So and then he described how the study process works and that valuation, and then he said politically it could be really challenging between political subdivisions in that conversation with school districts, because it's ultimately you're trying to calculate or come up with a solution for a budgeting issue, so he said that is a discussion all unto itself. So anyway, that was the conversation that I had with Kyle, and he just got out of a PERS board meeting when he and I got on the phone and talked. So he's keeping up to speed and abreast of everything that's going on. And so he said he will continue to update us. He and I are going to stay in contact just in case he hears anything or has any feedback, from, potential situations that, because he understands what that really means, especially as it relates to, NDPHIT and its structure. So he has a high degree of sensitivity about that as well. So any questions anybody has about that? Nope. Any other things you want to add, Mike, or yeah, I'll just turn it back to you.
I don't think so, other than just trying to be transparent with the board that there's things being discussed. Whether it happens is really, kind of wait and see.
Yep.
Okay. Well, why don't we talk about a meeting here? Sounds like we want to meet before September 16th. And did you have a time frame, Randy, when you'd like that to happen? For stop loss and then the audit report?
And so Angie and Stephanie, the dates that did we come up with some dates on that?
If we
We
could
didn't.
look
We
at
said
the week of September 7th, that would be great if we could bump it up that week.
How about a Wednesday? Seems to work for folks maybe a little better. Like a Wednesday at 1 o'clock, or they're September 9th.
Should we do Wednesday morning?
Nora, you're still sharing your screen if you're.
Sorry.
That's okay. If you wanted to keep your calendar up, that's great. It helps us.
Let's see.
I'm just glad to see that there's an anniversary for NDPHIT.
I know. Well, now you know
riveting.
why we can't be there at 1 o'clock.
Yeah. Proof.
Okay.
proven.
You 9 o'clock, you said?
Sorry.
9 o'clock on the 9th?
That'd be great.
Okay, hopefully we can get a quorum there. So our main topics there will be the audit report and then the stop loss agreement. Yeah.
Yeah, we hope to have quotes to present at that time. And because it's for the October pool, we want to be able to get the contracts reviewed, approved, and signed prior to October 1st so that we have stop loss in place.
Perfect. Okay, so we'll talk
So
about.
I'll send out a revision to the invitation then to the 8th instead at 9 a.m.
That sounds great. Thank you, Angie. And so I think we've gotten to the end of the agenda. I'll take a motion to can't think of it. End the meeting. There we go.
Adjourn.
Adjourn. There we go.
Chris, I'll make a motion to adjourn.
All right, Chris. Kevin. Any discussion? All right, everybody's in favor. Thank you. Hopefully those school people, you're starting school. Good luck as you start the school year. Otherwise, we will end the meeting. Thank you.
Have a great
Thanks,
day, everybody.
everybody. Bye.
Bye.